I have a video for you guys that are absolutely dynamite. Absolutely dynamite. It's a company that I talked about just recently. And you guys may say, Money Making Mitch, how do you do it? Well, I did not go to school for business or finance. I'm not a professional analyst. But what I can tell you is, and this is not financial advice, by the way, guys. What I can tell you is I listened to what the great Warren Buffett said. Common sense and critical thinking skills. That's how I knew SoFi was going to be a winner. That's how I knew NEO is going to be a winner. That's how I know UXIN will be a winner. And I've chosen another one, and it's doing exactly what I said it would do. So our very own subscriber, who is an accountant and has an economist background, did this article, and I'll leave the link in the comment section because he's a subscriber on my channel, but also incredible talent. And I'll put the link for where I got this article. He's been posting on X, the Golden Oracle of China, none other than the Golden Oracle of China. He's unbelievable. Suncar Technology selling shovels in China's EV gold rush. As we all know, the guy that was selling the shovel made more money than the guy going to mine for the gold. During a gold rush, sell shovels. This timeless adage captures the essence of profiting from a booming industry by enabling it rather than competing within it. In today's context, that means building the infrastructure behind electric vehicles, which NEO has done, and insurance, not the cars or policies themselves. Suncar Technology exemplifies this strategy in China's rapidly expanding EV market. As of 2025, listen to this, guys, because their earnings report just came out. As of 2025, over 51% of new car sales in China are electric, with the market growing at a 17.13% CAGR projected to exceed $788 billion by 2030. Suncar doesn't manufacture vehicles or underwrite insurance. Instead, it provides the digital infrastructure, the shovels, that powers the EV servicing and insurance ecosystem. And its recent earnings paint a rosy picture of what is to come in the future. What is Suncar Technology? Suncar is a Chinese cloud-based platform offering auto insurance and after-sales services tailored to the EV sector. It operates in an asset-light, tech-enabled model, avoiding the capital intensity and regulatory complexity of manufacturing or underwriting. Rather than issuing policies, Suncar connects EV makers, insurers, service partners, and customers through proprietary platforms. Though priced like a value stock with a price-to-sales ratio of 0.52, its 33% auto in e-insurance year-over-year revenue growth in first half of 2025 and improving adjusted EBITDA suggest a high growth trajectory driven by EV adoption. When you go on the article, guys, I'll leave the link. You guys will see the graph being displayed for that. Suncar revenue stream includes platform service fees charged to automakers and financial institutions for building and maintaining insurance platforms. This company kind of reminds me of SoFi Technologies combined with Palantir for what they do for grocery stores example. This is just an example. Commissions earned from policy sales, renewals, and auto service arrangements. Subscription SaaS fees for ongoing access to its digital infrastructure. This model enables scalable growth without underwriting risk, making Suncar more capital efficient than traditional insurance. Key bullish drivers: revenue growth and margin expansion. Revenue momentum, $441.9 million in 2024, plus 21.5% year over year to $222.3 million in first half of 2025, plus 9% year over year, with 2025 guidance of $521 million to $539 million, plus 18 minus 22%. High growth insurance tailwind. EV insurance premiums surge 111.3% year over year for this company to 697.6 million in first half of 2025, highlighting sector momentum and Suncar's expanding role in digital policy facilitation. Note, these cash flows can be more predictable than typical EV sales. Lifetime value tailwind. Suncar earns higher commissions on policy renewals than initial subscriptions, meaning customers' retention drives increasing profitability over time. This will be particularly impactful given the revenue surge in EV adoption. Gross operating margin expansion. Suncar have been discounting and increasing marketing spend in an effort to capture market share. Promotional service expense 34% of total OPEX. As the network effect grows, we would expect Suncar to enable more pricing power and marketing spend to decrease. Does that sound familiar, guys? Yes, like NEO. As a proportion of total expense, having a meaningful impact to gross operating margins. EV makers Tesla, Xiaomi, NIO, Li Auto, Leapmotor, Xpeng, tech platforms Huawei, ByteDance, financial institutions Ping An, PICC, China Zheshang Bank. These partnerships position Suncar as the center of China's EV and fintech ecosystem, creating a powerful network effect that accelerates adoption, strengthens its moat, and unlocks cross-platform synergies in insurance, mobility, and digital services. Number 3, ownership structure. Founder-led with institutional backing, Suncar structure aligns leadership with long-term shareholder value. 41% held by private firms, largest automobile services group. 19.2% by China Renaissance Capital, 7.3% by Chairman Zaichang Yi, 32.5% by retail and other sources. Innovation and AI integration. AI tool from ByteDance, which they just teamed up with, Dubao, and DeepSeek for claims automation. $10 million planned investment in blockchain-based RWA crypto assets. AI capabilities include smart dispatch, predictive analytics, and personal services. Market opportunity. GMW of China, EV insurance and B2B digital services, $150 billion projected. Contract structure, 1 to 5 year terms with auto renewals and minimum revenue guarantees. Customer stickiness, 95% plus retention of their customers. Does that sound familiar, guys? Yes, just like NEO. Low revenue concentration. Ecosystem scale, 20 auto OEMs, 1,480 enterprise clients, 48,000 service providers, 85 plus insurers. Risk to monitor. Regulatory risk. Insurance sector compliance in China remains complex. Likewise, listed in the US and Hong Kong listing would be very bullish for the company and attract new investors. Watch this space. Financing needs reliance on short-term debt and equity raises. AI risk, data privacy, algorithmic bias, and third-party dependencies. In conclusion, Suncar technology exemplifies the adage, a risking tide lifts all boats. As China EVs and digital insurance sectors surge ahead, Suncar is strategically positioned to benefit. Just basic common sense, guys. Not by building the vehicles or underwriting the policies, but by enabling the ecosystem that supports them. It's anchoring itself within multi-year contracts that include minimum revenue guarantees, ensuring predictable cash flows and reducing earnings volatility. Its asset-light tech-first model, deep partnerships with EV giants and financial institutions, and growing AI capabilities create a scalable, resilient business with strong tailwinds. While profitability remains a near-term challenge, Suncar high retention, expanding margins, and exposure to a $150 billion plus market make it a compelling pick and shovel play for investors seeking asymmetric upside in China's next economic chapter. I love this company. I think I've found another gem. I truly do. And like the article said, like our own subscriber, who like I said, I can't name him, this company is poised to grow with actually less risk, much less risk in the EV industry. It's like selling the shovels to the guy who was going to mine for the gold. So I hope you guys found this video yet again to be informational, inspirational, and motivational. If so, guys, boop, 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 don't forget to hit that thumbs up. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.